So ever since the interest rates have been going up, I've been noticing more and more owner financing deals. In this video, I'm going to tell you about how owner financing works and the things you have to look out for, and I'm going to tell you a horror story about what can happen. So with the rates going up the way they have, many people have been priced out of regular financing and they're looking for other options. So owner financing is turning up more and more, as I said earlier. Owner financing can be a good deal for people that cannot get qualified through a regular bank or mortgage process. This can be good or it can be bad. The big thing is to make sure you know exactly what you're getting into. The reason I say it can be good is because you can negotiate the terms. Unlike with the bank, they're pretty set in stone with how you have to qualify, what you need to qualify, whereas owner financing, the seller can be a little bit more lenient than a bank might be. So as a buyer, you have the chance to negotiate some of the terms, whereas you wouldn't with a bank. So how these deals normally work is you put down a large down payment, and then you come up with an interest rate and you make payments like you would on a normal mortgage, but it's right directly to the owner of the property. Usually these deals are set up in 5 or 10 years maybe. As again, they can be set up any way you guys agree upon, but the ones I see are usually 5 to 10 years, and then at the end of that, whatever you still owe needs to be paid off in a balloon payment. So the reason a lot of people are doing this is because right now they can't qualify for a regular mortgage, so they go into these owner financing deals because they think in 5 or 10 years down the road they'll easily be able to qualify and then pay off the balloon payment with a mortgage, or however they think they're going to come up with that money that's left at that point. So like I talked about earlier, the negotiation up front is huge in this process because this is where you're going to agree upon all the different terms. The seller usually has more leverage in this, obviously, because he owns the house, and he's also taking it off the market for 5 or 10 years, whatever you guys agree upon. So normally he's going to want a very large down payment up front to make sure that he's not just taking it off the market and basically renting it out. So this is where you really have to beware of the fine print and know what you're signing. Sometimes these sellers, they'll write these deals up themselves, or they'll have their own lawyer write it up and just hand it to you. And if you don't know what you're looking for, that's where you can really get in a bind. The biggest thing that I see where people get in trouble is a lot of these owner finance deals are very strict as far as when the payment is due and what happens if you miss a payment. With a bank mortgage, they have all kinds of federal laws they have to follow, and it takes a while, as we talked about last week in the foreclosure video, to actually evict somebody and take the house back. A lot of these deals I've seen very strict rules where if you miss a payment or you're late on a payment, the owner, the seller, can take it all back, and then you're out everything. You're out your huge down payment and everything you've paid on for the last couple years, whatever it's been. So you really don't want to get yourself in that position where you end up paying tons of money for basically a rental that you get nothing out of. The other thing that can happen, and this is a warning for the sellers too, you want to understand the deal that the seller has going. If has a current mortgage right now and then he's trying to sell it to you as an owner finance deal, a lot of mortgages in the fine print don't allow this, and if the bank finds out that they're doing an owner finance type deal or trying to sell the place, they can call the remainder of the loan due. So if the guy still owes 200 grand, let's say, on the house, the bank can call the loan due, and if he can't come up with it, well, guess what? He loses the house and you lose the house because it's not yours yet. And this brings me to that horror story I was telling you about earlier. So back in 2010, 2011, when there was all the foreclosures and I was doing most of my business was dealing with foreclosures, how it would work is I would get a call from the bank or an email saying, hey, you have a new listing out at 123 Elm Street, whatever the address was, and I'd have to go out there and make sure nobody was living in it or find out the situation, if they had already moved out, if it was vacant, what the deal was. I had to check it out because the bank now owned the house. And a lot of times I'd go out there and I would find that it was being rented out, and I'd have to tell the renters, sorry, but the bank's gone, or the house has gone back to the bank, so you have to move out. The bank would provide cash for keys, which was an amount of money to help the people out, whether it was renters or the owner. Obviously the owner didn't have any money, and that's why it's been foreclosed upon. So they would give them a few $1,000s, whatever it was, to help with move out expenses and to get a new place. Well, I go out to this one house and I knock on the door and some people answer, and I explain that this has just gone back to the bank, and they started crying. They were in tears. It was horrible because 4 months before they had done a owner finance deal with the owner of this house, and I think they put down like $20,000, and then they've been making their payments, they've been on time, they've been doing everything right according to the deal they had with the owner. But what the owner didn't do, and this is a little warning out there, a little news flash, there's some bad people out there, and this particular owner was just a horrid human being. This person had gone into this owner financing deal with this people knowing that they were going to lose the house, and they, you know, set up this deal, took the 20 grand, took the payments every month, and they weren't making payments to the bank. Well, the bank doesn't know this is going on, so it wasn't, you know, not that I'm defending the bank, but the bank had no idea what was happening. And when I went out there and explained this to them, like I said, they were devastated. They realized they had just been screwed, and, you know, it was a bad deal. I got them way more money for the cash for keys than I normally would have because of the situation, but just a bad deal, and something you really need to keep in mind if you're going to try an owner finance deal, because like I said, most mortgages don't allow this. So make sure you find out up front if they do have a mortgage. And the other thing is, if you're going to do these deals, make sure you hire a lawyer. I know they're expensive, but get a lawyer to explain the fine print, explain what you're getting into, or even write it up if the other guy hasn't done it, because it's going to save you, it could save you a huge heartbreak down the road if you happen to miss a payment or late or whatever the deal may be. But I can't stress enough, hire a lawyer to write it up, and make sure you go through a title company, because when you do that, that's also they'll do a title report that's also going to show if they have a mortgage on it. Then you can get into details on that as well and see if it's allowed, which, like I said, usually it's not. So I don't want to scare you off if you are looking at an owner finance deal. They can be good, but you just really need to protect yourself, because you're getting outside of a bunch of laws that protect you from banks. Banks, if you go a regular mortgage route, they don't want the house back. They would love it if you just made your payments. And with that being said, that means that if you do miss a payment or you get into a bind or whatever, they're usually willing to work with you. Whereas an owner finance deal, you may just lose it right away and not have time to work things out with the owner. Again, it's going to depend on the owner, but you have to protect yourself and go into this knowing what could go wrong. So once again, make sure you use a lawyer, make sure you know exactly what you're signing. And some of these owner finance deals can work out and can be a good deal, so just protect yourself. If you have any questions or would like more information, please reach out. We're happy to help, and we'll see everybody next week.
Thank you for watching our video. Please call, text, or email for more information, and don't forget to watch our other videos about Montana.